Welcome to Natural Gas World's second weekly review of the news in the global gas industry with me, Joseph Murphy. So in the news this week, Middle Eastern producers may have low costs, but they still need to take steps to boost cash reserves, just like the rest of the industry. And of course, keep their dividends flowing to the governments who are their shareholders, especially in the current economic conditions. So one way they can do this is by using their energy infrastructure to draw in international investment. And this is just what the UAE's ADNOC has just done, securing this week $10 billion in investment into its gas pipeline system. Put in context, this is the largest energy deal we've seen this year. This comes at a time when investment in our sector is, of course, tanking. So Italy Snam and a group of other international investors will assume a 49% stake in ADNOC's pipeline assets. ADNOC will essentially lease its ownership in the assets for 20 years in exchange for a volume-based tariff. ADNOC did the same with its oil pipeline system last year, securing an investment of $4 billion from US investors BlackRock and KKR. So it's part of a broader strategy for the national oil company. We might see other infrastructure investments of this nature going forward. For instance, Saudi Arabia's Saudi Aramco was reported a couple months ago to be looking to get an investment in its oil pipelines to raise about 10 billion. Moving on to Europe, there have been signs of progress at Germany's first LNG import project. So this is an 8 BCM per year facility that Dutch firm Gasunie and its partners have been developing in Brunsbüttel. They have just singled out a German-Spanish consortium to handle engineering, aiming to close an EPC contract by the end of the year. Add to that the fact that German power giant RWE is looking to close contracts to import the plant's gas this year, so we might see an FID on the project in early 2021, potentially. This would be a game changer for Germany, which is the biggest gas market in Europe, but has been relying on pipeline gas and domestic supply so far. But its gas needs are due to rise as nuclear and then coal power is phased out. There are other LNG import projects underway in the country, though at a less advanced stage. And how many of them we see materialize may depend on how the government looks to develop hydrogen as an energy source. So the government does not support decarbonized gas-based hydrogen at the moment, otherwise known as blue hydrogen. Instead, it is advocating only for green hydrogen, which is derived from renewables. If we see a change of policy somewhere down the line there, then expanded LNG imports may potentially have a role to play in this strategy. On the LNG supply side, current market conditions have placed a big question mark over the feasibility of many LNG export projects out there. Nowhere more than in high-cost regions like Alaska. Alaska Gasline Development said this week that they had shaved $5.5 billion from the price tag of a 20 million ton per year Alaska LNG project, bringing the total cost to $38.7 billion. This is, of course, still a gigantic figure, and at present market conditions, we're probably not going to see much movement there for some time. Going back to Europe, we are still seeing a steady stream of investments and contracts being announced in Norway since its parliament approved a new tax relief package earlier this month. So this package equates to about $11 billion in reduced or deferred tax, aimed at encouraging new projects to go ahead despite the market conditions. So Aker BP has filed plans with authorities to revamp the Hod oil field at a cost of $600 million, with flows starting in early 2022. So that's an extra 40 million barrels of oil that it hopes to recover. Equinor, meanwhile, has awarded contracts to Technip FMC worth $190 million for pipelaying and subsea work at 3 Norwegian projects. These sort of announcements probably wouldn't be being made if it wasn't for the tax relief. Aker BP, for example, said in March that it would even shelve HODs because of the oil price collapse before the tax relief was announced. So this relief received broad support in Norway's parliament, and other governments could potentially take lessons from Norway in how to support the industry in these difficult times. So this has been Natural Gas World's weekly overview of the news in the global gas industry with me, Joseph Murphy. Thanks for checking in and see you next week.